In the previous video, we were discussing the position in Uber that was initiated around 25.25 and other stocks of the sharing economy, Airbnb. On this candle glance watch list, I put indicator price relative to S&P 500 ETF. This is S&P 500 that's been in bear market since the beginning of the year, and Uber has been underperforming, so falling even more than the broad market, and Airbnb was outperforming at the end of last year, rising more than S&P was rising at the same time, and then it was underperforming, and I want to update some of the price action in Uber since the last video. So in this area right here, what was it, May, was a severe oversold condition, and it created a box that we traded with a half a position size, and we bought Uber right here. In a normal situation where you have like a trade, Uber is separate. I keep on pointing that out. Uber is not typical to what I do. But in a normal situation, you would put your stop under the box in case if the thing fails and continues lower. It didn't happen. Instead, Uber created another box. There's a new box right now. It's not as well defined, but no less actionable. And Uber broke out just recently. This is a daily chart that happened yesterday. So it can be bought again for trading purposes with a stop under the box at 20. The importance of the stop cannot be overstated, because you can lose 15, 20, 30% of your money and relieve your cash for some other speculation, or you can sit in it while it falls and falls and falls, or does nothing. It could just go sideways for years. Broadly speaking, S&P 500, the market, has been going up for a long time. It's a historical bull market. It's above 200-week moving average, and even 50-week moving average starting bending down just recently. So you can view it as a correction in a big ongoing bull market in S&P 500. While daily is, of course, in a bear trend, under 200-day moving average. Just recently, yesterday, broke above 50-day moving average and made a new high, which opened up the targets for 20, for 30, for 40. It can go up for a couple of months. There could be several big reactions. I don't think this is done on the downside. I was looking for some kind of a capitulation move, and then maybe a relief rally. This thing can go on for years in a sideways to down fashion. I was promising that we will talk about online ETF. Your old idea from the year ago, which at that time was kind of very high to buy, but now, it's been fallen last year, and it's fallen a lot. It's fallen back to the levels it was before this whole pandemonium started. And it's kind of basing over here. It's making a box. I want to keep in mind, on a weekly time frame, it's in a downtrend. It's dead. Okay? It can bump around in here for years before breaking out finally. So none of this is urgent. Keep your position sizes small. Bet in halves, because you can have stop out upon stop out upon stop out. Online ETF on a daily chart, fallen so much, you might as well switch to a logarithmic log scale. See right here the box, log scale, right here. You can switch to that, click update, and that will make prices down below wider. In the percentage terms, they're the same as up here, up above. but we can see it better. There is a box going on in here with several lows. Let's say ONLN. There you go. And the bottoms, there are two of them. The first one is very close, and the second one is down below. So basically, if this thing breaks out, then you buy it above 37, and you put your stop below 32, and Bob's your uncle. Or you can be a little bit more conservative and put it conservative. I don't know if this is conservative to have a wider stop, but it's a lesser chance to be stopped out and end up, running around and chasing bottom around these boxes. Let's look, what is this online ETF? When investing in ETFs, you always have to look inside. The online ETF is managed by ProShares. That's the company. They have a whole bunch of ETFs. The online is their featured one right now. It's on their spotlight. They also have one for metaverse and supply chain and pet care. And the one I love, nanotechnology, stock symbol tiny. Yeah, let's look at online to figure out what's actually in it. What is it that we buy? And the name doesn't mean anything. I know, online retail is soaring. Not your ETF. Your ETF is not soaring. That I just saw. Fact sheet. You can look at official data that is audited. I'm looking for, first of all, very important is expense ratio. 0.58% is actually quite normal. 0.5%, they have to take something for all this pandemonium, They trade this thing back and forth and manage some kind of an index under it. They manage this fund under some kind of an index. Some funds charge 3 to 5% expense ratio. This is a highway robbery. You should never be involved in anything like that. And also you need to look into their components, what they invest in, because sometimes they invest in other funds, and those funds charge you a fee, and it's a fee panopticon, and you will never see your profits. Okay, so what they got 26% in Amazon. You can stop right there. You can just go buy an Amazon and not pay any kind of a fee. What the hell does Amazon do? Amazon is one of the biggest stocks in the world. There used to be like thousands of dollars per share. It's a several $1 trillion market cap company. I don't even know. It's something ridiculous. They split. Now the price per share is much lower. You can actually buy it with your tiny position sizes. Half a position is 2 shares. Why not? You don't pay any commissions. Look, 200-week moving average is right above. It goes above it, 129, you buy it. Let's look at the daily time frame. Amazon. Yeah, 200-day moving average is above, right? So it's on this time frame, it's in a bear market. There is no rush to buy. There will be base building process and maybe another panic fall. What does it fall in a panic fall? It's down like 50%. Well, that one fall is all of it. It's 40%. And it happened in like 20 days. Yeah, 25 days, 1 month. And that's it. And here is your box. Here is the top of it. You don't even need to wait for 129. You can buy 125 something. And you put the stop under at 100. What is it? Oh, 20% stop. I don't know if I would bet a full-size positions on the 20% stop. You could. I mean, Amazon is a very established company. It's not going away. It's very systemically important and I think more viable than online ETF. Oh, a belief. Let's check the belief. When we have beliefs, we need to check them. The performance chart of online ETF, Amazon, online ETF, that's 2 of the red ones. And then Etsy and Shopify. I'm jumping around too much. I need to go back to components. In the components, the 26% Amazon, Alibaba, eBay, yeah, I understand. By the way, very good mix. Here is your Etsy, one that you brought, years ago. Wayfair, Mercado Libre, Overstock 1-800 Flowers, Groupon, VipShop. If VipShop will double, it's not going to make any difference on the performance of online ETF, by the way. You can look at some of the stocks down because they follow some kind of index. Yeah, index said Yatsen should be nothing. Yeah, but maybe it's a small company with a great potential, and you can buy that stock and hold that for a few years. That will double. It's not going to make any difference on online ETF, but it could make a whole lot of difference in your own account. Yeah, practically speaking, where is that thing? So the Etsy and Shopify, which is not in the ETF. The Shopify is not in online ETF. It's not one of the holdings. I don't know what it does. I actually looked. I still cannot figure out what they do and what they charge money for. It was down 80% since the beginning of this bear market in November. Yeah? Amazon and online is two of the red ones. My notion, my belief, is that Amazon is such a big portion of online ETF, they're going to track together no matter what. You don't have to buy ETF, you can buy Amazon. For all of the data that they have for the performance chart, the horse is Shopify. That one was up 900% on the move. And here is two red ones down below. The online ETF at some point in 21 was up 133% from 2018 lows. Nothing to sneeze at. No, it was more than that. Hold on a second. Let me pick the beginning date correctly. Let me pick a beginning date at the end of the double dip bear market of 2018. So online ETF was up to 125%, but they were tracking with Amazon very closely all the time. And during this time frame, Shopify went up 1,000. I don't even know. It's ridiculous. All right? So let's make a updated watch list. I'm going to put it under the video so you have a link. Airbnb, online, and Amazon, which is the same thing, and Etsy, and Shopify, and my recent position Solar Stocks 10, which I'm going to say a couple of things now and the rest in the next video. And your idea, uranium, which I pissed all over, but it actually has a lot of merit. Look, the bloodless verdict of the market. It doesn't matter what your beliefs are. I believe in Uber. It's been underperforming S&P. Okay, and you believed in Etsy, and that's underperforming S&P, or Shopify. And here is the solar that has been surprisingly strong in 22. I bought it. Let me switch this thing to more current 2-month time frame. I bought solar stocks right here between 20 and 50-day moving average. My stop is under 65. I bought full-size position for other reasons. I do not recommend it to make a part of your portfolio, because the first question is why is it? I don't know how long it takes. The first question is what to buy. You need to make some kind of a watch list, your own watch list from which you trade. The second question is when to do it and how to bet, and when we will get to why to sell. That's a whole separate topic. So I bought it for my own reasons, and also because it's so strong. See, this line is a relative strength in comparison to S&P 500, and this smoother line below is actually a 20 period moving average that they put on this indicator just automatically. I didn't do it. It kind of smooths out the performance characteristics. You can see that Shopify may be basing in terms of relative strength, and Uber is still kind of down, but maybe that's changing. It's not a good idea to chase relative performance. It's a losing game. You're always looking in the rearview mirror. But just for your own, like, impartial, I can see that uranium is underperforming, but 10 Solar stocks is outperforming. I'll tell in the next video about these two. It's a fascinating dive into ETFs and what is brewing under the surface and how their kitchen works and what you can do about it. But in the meantime, this is something to watch. Etsy is a buy right now. Shopify is buy any day. Amazon is buy pretty much either right now or in a few days. Online, I don't know if it's worth to buy, but you can just buy that and be done with your whole online team. You want to express your belief through the stock market? 37.77. Nah, let's make it more cute. 37.37 is your buy on online ETF, and put the stop at 31 something like 75 into here immediately. We crushed. Goodbye.